Hello, this is Dave, and welcome to Equities Story. I'm here with the Wolf, and we're going to have a look at some of today's announcements, but we're going to put on two trends as well. So we've been a little bit shy, but there's two where we're going to give it a go. And obviously just general share advice as per the disclaimer. So please read the disclaimer and understand the sort of advice we're giving is just very general.
Yes.
Wolf, my dear man,
Mm-hmm.
you've loved SCO.
And I still do, but that's the COVID situation. It's still rumbling around, the Omicrons.
But Wolf, listen, I'm a typical idiot, right? Like, okay, not vaxxed or whatever, can't go to Spain see my mum, right? I mean, a lot of people don't want to get vaxxed. A lot of people are not going to travel. Surely the travel industry is gonna. It's not going to be. It doesn't. Even if it's 5 or 10% of the marketplace gone, it's just going to be a tough place, isn't it, to invest?
I'd say for the moment there will be. Look, I think once the hospitalization rates will drop, everyone will relax the rules about the lepers like yourself. So the end of the day, it's just about not having too much pressure on the health system. That's why the rules are probably there, right? That's how they're thinking. So once that sort of gets under control, I think everyone will be back to some sort of normality, and we'll live amongst each other and hold each other's hands, Dave, again. But for the moment, I want you to be as far away from me as possible.
Well, definitely. I'm not. Listen, my wife's vaxxed. I'm not even allowed in the bedroom, mate. Like,
there you go.
I have to eat with a mask on. What?
I know you are just a walking disaster at the moment.
Yeah, but the point is that there's a lot of people that feel the same as me, Wolf.
Yeah, but the thing is, you will be fine. I'd say within 12 months. I think the rules should be relaxed by then. That's why this industry is still, unfortunately, going through the little bit of turbulence. And SKO's announcement, they suggest so. The lockdowns in New Zealand, the Omicron that's been playing around here. Booking.com, which obviously they've got a partnership with now, SKO, has reported, things are not doing fantastically around the globe. But January, I think they said there was some inkling of normality. I think 90% of the normal selves are back. So we'll see. Look, it's still up and down. One period they report everything's coming back to normal. The next period they're saying, no, we're being hit again. But today, unfortunately, it's a downgrade. We don't buy downgrades. We wait until things improve. So we just have to wait, and we're out for the moment. And as much as I love the stock, you just got to be out.
Nick Scully.
Mm-hmm.
So you read the report, Wolf. It was okay-ish, right? I mean, I think the revenue was down, wasn't it? And
the other way around. The revenue was up, but the profits were down. Yeah, which was, look, for me, I'm going, nah, I don't like this. But the market's thinking, yeah, well, that's what we expected. We're okay with that. But again, just shows you this space, this retail space, how uneven it is, and that's makes even PMV even more look unbelievable when they can actually increase their bottom line. Well, every other retailer is going backwards, right? So there you go. While I don't mind Nick Scully and probably say dividend stock more than anything else, right? And it's still probably going to be fairly, I suppose, come up with some good reports and some not so great reports. But generally speaking, holding trends, I'm okay with it. So hold on for the moment.
Wolf, I want to have a look at CTT. So, this story is just broken trend. And it's technically not looking very, very good. It's been on a fantastic run. If you initially look at the announcement today, they've lifted their revenues a lot to like about it.
Yeah.
The bottom line, right, seems to have suffered a little bit. Now, I don't know where their extra expenses have come from the bottom line. You trying to read through it, you think it's just development, more websites or whatever, right?
Yeah. I think so, because like you said, if you just go through a look through, it looks decent, right? You've got 180% increase in revenues. You've got to think to yourself, wow, this is a company that's hitting a lot of goals. However, it's come from 50 cents. That's what it listed for, to 450, right? That's almost a 10 bagger. The growth is fantastic. That's why it's run so hard. But I'd say they cannot sustain it 100% 180% growth at the top line. So that has to moderate somewhat. And they, at the moment, they are spending money. They have to for the business to grow and expand in different verticals. And they have announced a different vertical. They're moving into the beauty space. There's going to be some short-term hits to the bottom line, and that's what it looks like it's happening here. Markets, however, right? Sometimes they look short-term and thinking, we don't like the losses on the thing, so we're going to take some profits and maybe come back to it in the next 2 or 3 months. So look, it's just volatility in the story. I think if you believe in the story, if you believe their business model will work long term, I think maybe you'll have an opportunity to get into a much better price than if you paid it, $4, $4.50. So just be patient, and you'll probably see another opportunity to see when it starts going back up again. You'll probably swing at one point, Dave.
All right, let's have a look at COF.
Mm-hmm.
So it's really just a dividend play. I know it's below trend lines, but it's sort of holding up quite well.
Yep.
Solid announcement. A lot of these sort of real estate companies obviously have had big increases in valuations over the last year or so.
Yep.
But on the other hand, Wolf, you'd think with interest rates going up, that could adjust itself pretty quickly.
Yeah, this is the big risk here with these REITs, right? How will the interest rates affect them? How will it all affect the sector in a way? So look, there's unknowns in there. I think from my point of view, when I look at it, I'd say it's negative, right? Interest rate rises for companies that hold significant amounts of debt, and usually they hold about 50% of debt on their books. That's obviously going to impact their repayments and interest rates. The other thing is, how it's going to affect the actual attractiveness from a point of view of as an asset and other people buying this sort of thing. So, yeah, look, I think there's a bit of negativity in the short term. So we'll see how they react. But for me, it's a dividend play. So as long as it probably, it's got to hold up that monthly trend for me, and I'm okay with it. So that's what I'd be looking at.
Aristocrat, Wolf, some not good news.
No, look, if you like that Playtech acquisition that we're making in the UK, then unfortunately not good news today, because it looks like that will be voted down, or it has been voted down, and the scheme of arrangement will be lapsed, which is not good, because I think they were talking about this is going to be a huge deal for Aristocrat and give them a massive boost to growth. So that's, I don't know. I mean, they're talking about maybe they're looking at a different way of structuring this deal, maybe. So it's not completely dead, as in this round is dead, but there might be another round to come in the future, right? For the moment, for me, I'd be staying away. I want to see some clarity. I want to see what's going on here. So pass for me for the moment.
Wolf, we're going to go for the two trades now, and the first one is LDX, Lumos.
Yep.
It's newly listed. It was listed at 140, 150. Been on a bit of a downtrend since then, but potentially some good news. It's trading at 113. So we're interested in buying it, I think, around this sort of level, and target at least at 140 with a stop loss around 96. Now, could you tell, it's really early days on the chart, but could you tell the members why we're sort of, and there's a bit of risk in here, but why we're liking the story?
Well, it's all about the rapid antigen tests. These are homegrown tests. They're looking at a partner with the Victorian government. Possibly there might be more similar types of deals. The only thing that's missing now is approval from obviously the health, getting the TGA approval for those rats. Once they get that, they said they can pretty much quickly scale up. And this is what the Victorian government is given the opportunity to establish facilities to produce these things and, be a major player in Australia. So really interesting. I mean, I saw a number of big funds joining the register recently, Dave. So potentially there's a lot of interest that this is going to be a winner on the rats side of things for Australia. But, there's that big risk. Will they get this approval from the TGA? Once they do, it should be a quick ramp up, and there should be quick cash flows coming through. So that's what we're playing at, Dave. It's a high risk, but could be potentially big reward.
All right. And the other trend we're going to put on is Woodside. Now, maybe a little bit early, but, we obviously hope there's no war in Ukraine, but if there is, then we could see Woodside obviously trading back up even to $34. But even so, oil looks strong, Wolf. It's about time I think we had a trend on with this story. And we looked at the plays, Woodside, Santos, Origin, and Woodside is the one we believe will most probably benefit most with what's going on in the future. So, or what could happen. So Woodside's the play.
I think so. I think it's the premier oil and gas stocks in Australia. If there is even there is just tension in Europe at the moment, the oil and gas prices are going up crazy, right? So even though the tensions could go on for the next few months, you'd expect that Woodside will go on with this, Dave. So I am definitely.
Are we still getting a juicy dividend out of Woodside at the moment?
Let's have a quick look. Let's see what's going on there. And and OPEC was saying that they want to increase production just to offset that rising gas prices. But the questions are, can they? So there's so many questions. I think it's an educated punt for sure, Dave. And I don't mind you going a little bit early. Better get in early and benefit more. I'd probably get more out of it because you can feel that this is what's happening right now. So our gut says it's going up. Let's do it. So we've got Woodside has got a dividend yield of 3%.
That's nice. That's okay. So it's yeah. I mean,
better than the cash in bank.
All right, that's excellent, Wolf. So we've got two really good trends. Westpac, what did you make of their announcement? The share price action still looks fairly weak, Wolf, on the stock.
Yeah, look, it's okay. I think it was fairly steady. I think 1% increase in cash profits. So all up, steady as she goes. I mean, it's still big profits, 1.8 billion bucks, but steady. There was nothing great in there. I think management changes as well. So it will be a hard road back to that $22.30, I'd say.
We looked at New Farm. I mean, it's not looking too bad, actually, Wolf. It's having a bit of a run. We're still, listen, technically.
Not 100% convinced. I think that's probably the key for me. I like the announcement today. I think there's definitely much more positivity than negative in the story now. And I can feel we could get to that 560 and beyond. But I just think we just wait till we see a little bit more out of it. Because we've seen these false moves before by New Farm. So give it a bit more time.
Right. Okay, Wolf. I just want to quickly mention some stocks in America because I think it's really interesting. Obviously, at the moment, we saw massive collapse in PayPal.
Yeah.
It just shows buying below trend lines is extremely dangerous. And and again, we're talking about maybe come back to $100. It certainly looks like it, doesn't it?
Yeah, it does. And the next one is just even worse. This looks awful.
Facebook.
Okay, so they come up with their report today. It wasn't very well received at all. They've missed pretty much across all lines. And there's trouble ahead possibly from Apple and their security on the devices and privacy on the devices, which means advertising, which is all about Facebook. It's all about advertising. And for me, I've always had that train of thought. You either love that model of a business doing something and the only way they can actually make money is out of advertising, which to me is absolutely ludicrous, right? But that's how they build the empire on. That can be so effective so greatly. If something happens detrimental to that your actually businesses doesn't matter what happens in there. It's all about advertising. Makes no sense. But anyway, that's how they operate. That's why for me it is very fallible business model. Today, aftermarket down 23%, Dave. I wonder what's going to happen on the Nasdaq overnight because this is dangerous. I'd say. I hope it doesn't get that down that far, but we've seen PayPal getting smashed. You just never know, right?
Well, you know what? We've hit it quite well with these American stocks because we've been pretty pro Google, Apple, and Microsoft.
Yeah, that's the only three.
And they do seem the ones, really, don't they? To be involved with. And obviously, Amazon's got its issues at the moment. But yeah, Facebook. I mean, I don't like the way they sell our everything about us. I hate
it. That just, to me, they're just sneaky, or it's all about money. They don't give a S word about you. All I care is about how they can make more money off you through selling you pretty much your soul, right?
Yeah.
It just doesn't work for me that way. So there'll probably come a time of reckoning somewhere along the line. Someone will come up with a better platform, less privacy issues and selling your private details to someone else. Because there's no alternative out there, Dave. That's why, unfortunately, us as people, we have to keep using it because we know, there's nothing better out there. If there was, I'd be moving quickly. Now, I just want to say, while I hate this model, and I'm thinking, and everyone's probably thinking, so why do you like Google then? It's the same sort of model. Well, in a way, they also advertise through getting all their money through advertising, but it's a very different model. The Google's much stronger position than Facebook will ever be as a platform. So, yeah, look, it's still super dangerous for me, Google, but it seems to be a much more rounded business than a Facebook is.
And I think people who use Facebook are fed up because of the advertisers on it. Because we advertise on it and we did a normal we're so good and everything. You've got to join Equities story, right? And everyone goes, oh yeah, I heard it all before. They're like they're just over it. The people are just over, they want to go on Facebook, have a chat with their friends, show everyone how rich they are, show them photos of a big, but I think people are getting fed up getting sold to there. And they're getting fed up a little bit, like everything about them Facebook knows, and so they should.
I'll tell you what, if Facebook never bought Instagram or what was it, the other one, WhatsApp and so on, I think they'll be dead in the water, to be honest. It's the other companies that's been driving their growth too. So for me, I don't know how the Americans allowed Facebook to ever buy the other companies. It's just basically meant it's going to be a monopoly. And then they're asking the questions, why have we got to this stage? Because of the capitalism in America. It's just anything goes, really. So it's just crazy. So anyway, let's move on. It's less said the better.
All right. It's good conversation, Wolf. Facebook, they're politically motivated. They back certain governments. They should be
whatever works for them. They're going to back. Right? This is the thing. It's
But
more money out of.
But it's wrong. You think companies like Facebook and Google should be in a position of responsibility where they have to be above that, but they're not.
Absolutely. Every company should have some moral responsibilities and obligations, right, towards their clients and customers.
And be impartial, like newspapers in the old days.
Absolutely, Dave. Absolutely, they should be impartial. They should be, a global citizen.
Well, I don't read the newspapers anymore because it's like living in Russia. It's like they just say exactly what they're told to, where the money's coming. I mean, there's no real journalism anymore. I'm fed up with it.
Unfortunately, that's what the world we live in at the moment.
Except Equities story, we say what we feel. We
exactly. We're not bound to anyone. We are very independent, aren't we, Dave?
Yeah, definitely. But it depends on how much money they have. No, of course we are 100% independent, and that's the important thing, and that's exactly what our share advice is all about. On that note, Wolf, 2 trades today, Woodside and LDX. Let's hope we make some money. Yeah. And
exciting news, Dave. We scored another interview with another company that we really like, so stay tuned for that.
Yeah, that is exciting. All right, well done, Wolf, and look forward to doing this tomorrow.
All right,
see you. Bye.
Bye.